Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market update. And what a big day it was indeed, with a lot of big tech coming and reporting earnings after hours. We have a couple names to take a look at, guys. That's going to be Microsoft, AMD, and Alphabet. Now, obviously, there are a few more plays that I did want to cover today, but we'll have to take a look at them later in the week since we do have three really big reports to cover today. Later on in the week, I do want to cover Starbucks, MSCI, and CP. Just a quick look at those. Starbucks is actually up after their earnings in the after hours. Starbucks performing very nicely after their earnings, up about 4.5%. MSCI, another one of my favorite companies in the entire market at this point. They are an index provider and data provider as well for financial institutions. They had beautiful earnings as well of about 9.31% to the upside. And CP, my favorite railway play, one of my favorite value plays in the entire market. They also posted very decent earnings, up about 1% in the after hours. So I was doing a lot of work catching up on all of those. But as of today, we're only going to present the big three and tackle the rest of those later on in the week, potentially including one tomorrow. Tomorrow, we're going to cover Qualcomm and MasterCard. I'm going to try to include one of the ones that I missed, most likely Starbucks. And then on Thursday, we obviously have our three remaining big tech plays. On Friday will be the catch-up day for anything that we might have missed, probably MSCI, CP, and maybe I'll even include some of the super micro, as it does seem to be a very hot retail play. Nonetheless, after having reported earnings guidance earlier than expected, super micro over the past couple of weeks is already up 77%. So we're going to take a look at what happened there, most likely on Friday. But as of now, guys, we got a lot of data to cover today. Markets pulling back from their all-time highs, and you can even see here in the terms of the NASDAQ from top to bottom, including your after hours drop, from most of that came from Google. We're talking about, guys, from the morning open pretty much through the after hours close, markets QQQ was almost down 1.5%. So going to be very curious to see how those open tomorrow. Like I said, most of that downside was in fact led by Google. So we'll take a look what happened in their earnings. So in today's video, guys, we're going to be covering, of course, those three earnings: Microsoft, AMD, and Google. Number two, we're going to be going through our major indexes in terms of the technical analysis, see how everything is leading into the rest of the week. Huge day tomorrow with Jerome Powell speaking and commenting on interest rates for the potential March through May period. So we're going to see his stance on that. And then obviously we're going to be covering our major tech plays, a bit of negative news on Apple as well. So we'll take a look into that. And lastly, guys, no portfolio update for today. Didn't really change many, only about one change in the portfolio today. So I will save that most likely for tomorrow, since I may be adjusting a few more things tomorrow. So without further ado, guys, let's get right into today's video. So SPY on the day down 0.08%, QQQ down 0.67% in leading up to the expectation for earnings. A lot of big tech was actually red on the day prior to your earnings, but we did have some very significant healthy rotation in financials and XLV, and that's what we've been calling for. If QQQ is to take a little bit of a breather, especially with all the earnings that they have coming up, we need to see financials and healthcare making up for the losses, and they did a great job of doing that today, which kept SPY relatively flat. On the one-day relative, you will see here, guys, that this does not encompass your after hours earnings, obviously, but on the day, big tech with your major loss leaders, semiconductors pulling back substantially, led down by AMD, but the rest of the market was fairly decent. Had some little outperformance here in energy. Healthcare was most likely muted, but still decent performance across the board. And financials, really your outperformer for the day. You can see that best on the one-day relative performance. Very decent performance by your financials, but a lot of other things just pulling ever so slightly back on the 1 week relative. Everything is still majorly in the green. So we will see if tomorrow Jerome Powell will have anything to say about that, and if he can change the tone of the week. But keep in mind, guys, even if this week does end up negative, we really are working with a lot of space on SPY and QQQ, just looking for those daily higher lows, weekly higher lows as well. So before we do more technical analysis, let's get right into your earnings, and we're going to start it off with Microsoft. So Microsoft did not disappoint. So Microsoft actually flat in the after hours. Very, very volatile after hour session for Microsoft, down initially about 3% and recovering most of that. We'll see how they open tomorrow. But Microsoft, I mean, they just did what they do best. Nothing fancy, just continuously beating expectations. So take a look here on the EPS For the quarter ended, a nice little almost 6% bump on EPS and beat on revenue. This was actually one of Microsoft's record quarters in terms of revenue, and they did have a nice little increase in your operating margins. Just a quick reminder, guys, Microsoft is one of the most solid companies in terms of their balance sheet in the entire market. Take a look at this EPS expansion expected over the next couple of years. We're talking about over 10% EPS expansion over the next couple of years, and revenue as well is poised to grow additionally at about 10+% per year. No red flags in the business at all. Microsoft never has a lot of debt either. You can see that their long-term debt, what little debt they do have, is largely encompassed by their ability to generate high free cash flow on a yearly basis. And also they're sitting on a fair amount of cash and cash equivalents. That's actually bumped up a lot, guys, in the past couple of quarters here, all the way up to, north of 80 billion at the release of last quarter. We'll see the update for that into tomorrow. But as a whole, let's take a look at the headlines. Microsoft beats estimate as Azure grows faster than expected. Azure was going to be the name for Microsoft in terms of their earnings. That's what everybody was paying attention to. The expectation was in the high 20% range, and anything above that probably would have given the stock some lift, which it did. They actually beat on Azure growth, and anything lower would have probably had a negative effect on the stock. But keep in mind, guys, these stocks, most of big tech, has run so much in the past couple of weeks that if earnings were an absolutely blowout, such as Netflix, right, and the doubling of subscriber count from Netflix, if the earnings weren't an absolute surprise, you may have had a little bit of sell pressure leading into some taking of profits if they just came in line or slightly better than expected, because we've had such a nice run up that everything is starting to get a little bit overvalued in terms of your RSI on your daily timeframes, and Microsoft is pretty much the same. That's why we're having a mixed reaction in your after hours right here, just unable to push a bit higher, but very good growth. Microsoft beat on top and bottom lines as Azure cloud growth was stronger than expected. Software maker acquired video game publisher Activision Blizzard, the largest deal ever. Now, they did say in the call, guys, that it was going to take maybe another quarter or two to really streamline Activision's business into Microsoft. So that division, the Activision division, may be a loss leader. Not that much, though, in terms of EPS, but still a loss leader for Microsoft. Now, let's take a look at their numbers specifically. So I want to take a look, guys, at their business segments. In my opinion, this is the most important thing to take a look at Microsoft. Is the business growing as a whole? So this is going to be the report for fiscal year 2024 Q2. They run a couple quarters ahead of the calendar year. They have a different earnings cycle than most companies. So we are going to be looking at fiscal year 2024 Q2. And you can see here Azure putting in 30% year-over-year growth. That is absolutely phenomenal, or quarter growth, excuse me, for Azure. Absolutely phenomenal growth. That's what you want to see, high 20%, even 30% growth for Azure. It's their fastest growing line of business currently. Now, the other lines of business did significantly well. You can see that there's no more red as there were in terms of a few quarters ago in their Windows OEM software. That has now recovered as well. So dynamic products and cloud services up 21%, the Office suite 17%, Office commercial suite 15%, right? Consumer segment of Office 5%. Their search plus news advertising. So they've been doing a good job of including AI in their Bing service in terms of a search engine to compete with Google. So that's up 8% in terms of their advertising. Very good. Server products and cloud services. This is another big line of business for Microsoft, up 22%. And it just goes on here, guys. But the main recovery, keep in mind, Windows OEM and Xbox segments. Look at this growth in the Xbox segment. Fantastic growth for Microsoft's gaming division. And Windows OEM is now back to a quarterly growth cycle. So you really like to see that, guys. And they also did a good job here. Layoffs continued. Microsoft LinkedIn subsidiary cut around 700 jobs in October on top of the 10,000 announced earlier in the year. So doing a great job at cost cutting in this high rate environment. So very, very good. Bulletproof report really by Microsoft. All of their lines of business increasing, record quarter in terms of their revenue, record quarter in terms of their profit as well. Very decent in terms of their cash return to shareholders as well. Returned 8.4 billion to shareholders with 5.6 billion in dividends, 2.8 billion in share repurchases for the quarter. Very, very good. And cash flow just continuously increasing their free cash flow. This is what you love to see here, guys. Cash flow from operations was 18.9 billion, up 69% year over year, driven by strong cloud billings and collections on a prior year. Now your free cash flow for the quarter was $9.1 billion in additional free cash flow, up 86% year over year. Very, very decent bump in free cash flow. So all in all, Bulletproof report by Microsoft. Not going to really go through most of these slides in terms of their earnings, guys. This is really breaking down their lines of business and their growth. But as you saw in our previous table compiled here on CNBC, they did a great job of compiling all of that together. So we don't necessarily need to go through each one of these individually. But what I do want to bring your attention to is this growth in Azure. This is the name of the game for Microsoft currently. So services, the previous slide, server products and cloud services revenue grew 22%. Very good. Azure and other cloud services revenue grew by 30%. And that's what we need to maintain this high 20%, 30% growth margins for Microsoft. But all in all, very decent quarter. Nothing wrong to say whatsoever. Here you see the negative impact from the Activision Blizzard acquisition that they had, right? So they made a lot of revenue, but the cost of revenue was fairly high, decent gross margins. But then here is your other expenses, right? Purchase accounting adjustments, integration and transaction related costs of the acquisition. So that obviously ate into your gross margin, and other operating expenses actually left them with a loss for the quarter. So Activision, not fully yet being integrated into Microsoft, did slightly hold them back. So that is very good. Very solid report by Microsoft. Nothing bad to say whatsoever, guys. It's absolutely amazing that they continue to grow profit and revenue at this pace, right? So revenue $62 billion. Absolutely wonderful quarter from Microsoft as a whole. Their best quarter, you can't see it because my head's in the way, but if this is Q2, they brought in about $62 billion. Record quarter in terms of revenue for Microsoft, and their net margins also improved to about over 40%. So that is exactly what you want to see. Everything going in the right direction. Revenue, profits, free cash flow, everything up, all lines of businesses performing very well. Very solid report by Microsoft. And I think I think that I closed the page too early, but what I wanted to show you guys is, do I still have it up here? Here we go, is the chart. Wall Street projects Microsoft's profit to dwarf Apple's. This is as soon as 2025. You see this cross here where Microsoft will be generating more revenue on a yearly basis than Apple in the expectation starting 2025. So do we have a new market leader? You guys know Microsoft recently eclipsed Apple's market cap ever so slightly in the past month and a half. So we will see, can they continue to hold the #1 rank over and above Apple, which has held it for so long? I do think that Microsoft is a better position than Apple, especially leading into the next year or two, as Apple continues to deal with a little bit of cyclicality for their product sales. Now, moving into earnings number 2. So Microsoft, obviously for me, I've reiterated this a bunch on the channel. I can't really buy this stock, guys, unless it really dips anything back below about 390, 385, dipping back into our previous all-time high area of pretty much support. Now, moving on to Google. So Google, unfortunately, bearing the brunt of your sell-off in the after hours here. So you can see Google was already down on the day prior to its earnings by about 1.16%, now down an additional 5.5% in the after hours. But everything was not so bad. This seems to be a little bit of an overreaction by Google. Google is still looking extremely healthy. We'll go through the technicals later in the video. But as a whole, guys, I was actually pleased with Google. There's only one little thing that Google needs to do to really bump up its cost efficiency, and we'll take a look at that in the report. But as of now, Google didn't issue any guidance. Microsoft either did not issue any guidance for the next upcoming quarter or for 2024. In terms of numbers, they said that they expect to deliver strong results, but didn't deliver any actual tangible guidance for the numbers. Now, Google, take a look here. They actually had a double beat. So beat on EPS, beat on revenue as well. So why did the stock sell off 6% in the after hours? Bit of an overreaction, guys. Like I said, anything other than a surprisingly insane beat like Netflix did was potentially going to be met with a little bit of selling pressure. You can see we were already overbought leading into the earnings. And over the past couple of weeks, guys, keep in mind, right, since the beginning of January, Google is really up about 13%. So a lot of this earnings increase potentially already baked into the stock price, as they did eclipse most recently their all-time highs. So a little bit of a sell-off, but everything's still looking healthy as a whole here, guys. Take a look. Alphabet shares slide on disappointing Google ad revenue, but it really wasn't that disappointing at all. And we're going to take a look at that, okay? So due to workforce reductions last year, the company recorded severance and related charges of $2.1 billion. So this obviously hurt their bottom line. Google makes a ton of money, but still $2.1 billion from pretty much their recorded net income is roughly about 10%. So that is a hefty charge in terms of bringing down their net EPS and their net margins for the quarter. Right. So let's take a look at this, guys. EPS, revenue, we've already went over it, right? So revenue over the year, so they report a true year revenue, 86.31 billion. That is a record year for Google. EPS ending for the APS ending 1.64 versus 1.59 expected. So beat on EPS for the quarter and for the year as well. But here's the thing in terms of their lines of business. Google Cloud beat expectations, 9.2 billion versus 8.94. Very good beat on Google Cloud. YouTube ads coming in ever so slightly in terms of a miss right here, missed by about $10 million on YouTube ads. So that's fairly in line, not too much to see there. Traffic acquisition costs actually came down. So their cost to acquire new customers in terms of traffic actually came down. So that's a very, very healthy sign as well. Now, where did the negative things come in here? So let's take a look at these last two segments, and then we'll get into their earnings specifically for that one main thing that I'm looking out for Google. So across Alphabet, CEOs continues to focus on investments in artificial intelligence and embedding new generative AI tools into more of Google's key products. To get there, Pichai said that the company has to make cuts elsewhere, meaning more layoffs on top of last year's 12,000 cuts, which amounted to roughly 6% of its full-time workforce. This is the guidance that you want to see from Google. Their cost control is not the best. They make a lot of money, they generate a lot of profit, but with that profit, they're kind of lackadaisical in terms of the way that they spend their money. A lot of stock compensation. They pay their employees too much, and they also have so many employees. So a lot of analysts are wanting them to really cut down not only on stock-based compensation, but also on their headcount. And it seems as though the CEO has listened to the demands from Wall Street and is currently doing that right now. Google Cloud remains a growth engine with 26% expansion in the fourth quarter compared to a year ago. So that's very good, right? Very good in terms of Google Cloud growing larger, but it's such a small segment for them, guys. Operating income in the fourth quarter for Google Cloud was only $864 million. And we're talking about a company, right, guys, that brings in, you know, in terms of a quarter over quarter basis, right? They bring in about $78 billion on a quarterly basis. So that $800 and something million in terms of net income from their cloud services business is not going to move the needle that much. So let's take a look at their actual report. Google did not issue guidance, and they also don't have a fancy slide presentation either, unfortunately. So we're going to have to go through the numbers as they're presented right here. So take a look, guys. We're going to run over their different lines of business. So take a look, Google search. So right, this is the quarter ended December 31st. Very, very, very decent. This is their whole year in terms of revenue. So let's take a look at some of the math. Did they grow Google search and other? Well, 48 divided by 42.6. You'll see that they grew that about 13% for Google search. Very good growth. YouTube ads also growing very decently, right? 92 divided by roughly 79. 16% growth in YouTube ads. Very good. Google Network actually came down ever so slightly, but their advertising branch actually came up nicely in profit. Yes, it missed analyst expectations by a bit, but it did grow. So taking a look at this, 65.5 divided by your 59 roughly. So this is about 11% growth in Google advertising year over year. That's very good. Nothing wrong with that at all. And their subscriptions is also up as well. So all in all, guys, Google services, their cloud business, everything growing fairly well as a whole. That Google Cloud, as you saw, was about 26% in terms of growth. So that's very good. So where is the bad thing, right? Well, number one, number of employees. They have a lot of employees, guys, and they pay their employees very well. We'll take a look at that down below in terms of the stock compensation, but they've already cut about 8,000 employees from their workforce. Need to see a little bit more. Now take a look at this, okay? So stock comp, right? So take a look at, can we find it here? Compensation, keep in mind, right? So just bear with me here, guys, a little bit. Here is your stock-based compensation for the quarter, okay? So you'll see that the net income for the quarter ending 2023, net income was about $20.5 billion, okay? But from that, guys, they paid too much stock-based compensation. This has been Google's problem for a while. It's the reason why they don't have the profit margins of a company like Microsoft does. So take a look at this stock-based compensation, right? That's roughly 25% without doing the math. So let's say 56 divided by 206, right? It's going to be about 27%. 27% of their net income goes to stock-based compensation. It's just too much, guys. If you take a look at Microsoft stock-based, this is the table from Microsoft, okay? Take a look at Microsoft's here, stock-based compensation. Take a look at their 3 months quarter ended 2023, right? 21,870, and their stock-based compensation is only about 28, right? So 2.8 billion with a $22 billion in terms of net income, right? So Microsoft in relation to Google's 27%, right? 28 divided by 21.8, right? So that's about, it's less than half at this point, right? So let me do the whole thing. Sorry about that, guys. Got a bit distracted. So it's about 12%. So literally half of what Google is giving in terms of stock compensation. And that's unfortunately why Google only has, net margins right now. In the past couple of years, we're talking on a year-over-year basis, right? In the mid 20% range, but Microsoft, in terms of their margins, right, is quite higher at this point, almost double, right? 39-40% as of the most recent quarter. So that is going to be a big thing that Google needs to address. They need to address their headcount. They need to address that stock-based compensation. That is what Wall Street has been asking for in the past couple of quarters, and they just still have not done it yet. So that is the one thing that's currently plaguing Google still, need to get their costs under control. Even though they're making a lot of money, guys, they just need to get more efficient. They should be more efficient. It's just that they're not. Now, lastly, guys, we're going to take a look at AMD. So AMD had earnings. AMD has obviously run up a ton in anticipation of these earnings after putting in some very good growth in terms of their cloud data AI services that they've been running. Ever since they put out that news about in early December, the stock was currently up, 51%, now pulling ever so slightly back. So what happened to AMD in the after hours? You can't see it, so let me move myself over. They're actually down 6%, guys. So AMD from the highs recorded just last Thursday, now all the way down to 161. We're talking about a 13% drop, but AMD still set up beautifully on the weekly time frame. So what exactly happened to make them drop 6%? Well, AMD, guys, they had a slight little miss on EPS. They did beat on revenue, but the Q1 guide came in a bit soft. So AMD, I'll always remind you, I really love the company. I love the direction that they're going with the company, but a big factor with this company is, unlike NVIDIA, they really have they have a solid balance sheet. That was the first thing I wanted to show you. They don't have a lot of debt. They reiterated that. Have a decent amount of free cash, so has decent cash and cash equivalents. But the kicker, guys, is you'll see here their EPS it is not consistent, right? There's not a lot of consistency in their EPS on a quarter-to-quarter basis. It also fluctuates a lot. And even their revenue, guys, it's just, yes, the revenue's been going up, but it's not as consistent such as the other companies, right? If I pull up Microsoft, for example, you can see how consistent this quarterly EPS and quarterly revenue is, and even on an annual basis, right? Very consistent, but AMD is just not consistent yet. They even had a few quarters over the past year where they actually had, reductions of EPS and actually posting negative net income for a few quarters. You can see this down here, that in the last few quarters, there was a few of them that they were actually posting very slim profits to even negative profits. So just not consistent enough yet, but I like the direction that the company is taking. That being said, guys, it's run a significant amount ever since they put out that news. So gonna be waiting for a buy in terms of myself personally. Now let's get down to the actual numbers. AMD reports revenue growth and robust data center sales in Q4 and full year 2023. So Q4 revenue increased 10% year over year to 6.2 billion. That's good. Full year revenue, however, declined in relation to 2022. So that's once again the inconsistency of the revenue streams. Q4 net income surged to 667 million, a significant rise from 21 million in the same quarter last year. So once again, inconsistency, right? This is not a lot of net income per se, but when you take it into account to the fact they only made $21 million in Q4 of 2022, it is a significant rise, but still not enough. Full year net income decreased by 35% to 854 million compared with the previous year. So once again, inconsistent net income and bottom line profits. But their segments are indeed increasing, however. So the business is growing. It's just very, very choppy growth in terms of that. It's not very predictable or consistent, which is the main thing with AMD here. So before we take a further look at anything on this in terms of the article here, I'm just going to go over your revenue and net income span, right? So revenue, you can see that although in the last year they've been dipping ever so slightly, they are back on the uptrend. That's nice, and they are recuperating a bunch of their net income that they were really soft on ending 2022 and early 2023. So you like to see this. It's just they're not yet fully running on all cylinders, as we can say. So let's take a look at your earnings call here in terms of the slides. We're not going to go through that many, guys. So let's just take a look at a few of them. So here is AMD's business. If you haven't seen their business, I would highly recommend to go through their shareholder slide on their website. So they have 4 lines of business. Their data centers, which is the one that they're trying to compete with NVIDIA with. Right, so their data center services, their client services, which is basically CPUs. Whenever you want to buy CPUs, you obviously have the choice between Intel, between AMD, a few more, but this is going to be their client, more retail-oriented segment for CPUs. And then obviously they have your gaming segment, which is all your graphics card segments and whatnot. And then the embedded segment. The embedded segment is more commercial and industrial applications of a lot of the products that they currently do. So these are going to be pretty much for your let's say a business wants to put up a bunch of servers or potentially a bunch of workplace computers or whatnot. They're going to sell these suites of chips because potentially in terms of workforce computers, you don't need the state-of-the-art new retail-facing products that are given, right? So those are the 4 lines of business for AMD as a whole. You can see here that their data center accelerators is the one thing that they're going to be talking the most of because the highest growth segment and one of the most profitable segments. And you can see a lot of their partners so far: Microsoft, Meta, Oracle, Arista Networks, Broadcom, right, Cisco, Asus, a lot of large partners. So we need to see this increase if they want to have a chance at catching NVIDIA in terms of that segment. So in terms of your fiscal year, obviously you can once again see that the revenue was on a slight decline. In terms of the quarter over quarter, it was good, but here's your gross margin. Gross margin is decent, but they don't bring enough of it to your bottom line. And this has been the one thing that I've been saying with AMD over the past couple of quarters. They just don't bring enough of all of that revenue to the bottom line, guys. You cannot be making, as a company, you cannot be making $21 billion in a given year and with having a gross margin of 46%, but only bringing a few $1 million or $100 million to your bottom line. It's just not good enough. So you need to see AMD have a little bit of cost reduction. Now, yes, they did spend a lot on research and development for these past 2 quarters as they have been ramping up their services for your data center services, but eventually we're going to need to see streamlined cost control, streamlined capital expenditure control, and more money coming to the bottom line because the EPS is just not high enough for a company at this market cap trading at a very high multiple right now. They need to see some EPS expansion because most of this price increase, guys, has literally only come from price to earnings multiple expansion. It hasn't come from underlying revenues of the business 10xing or underlying EPS of the company 10xing like NVIDIA, right? So that is the main thing. If you take a look, comparing it to NVIDIA, right? We're going to go over this one more time. So if you compare it to NVIDIA currently, you can see their annual EPS still not on that ramp curve, but company like NVIDIA is already realizing that revenue, right? And they're already boosting their EPS substantially in the next couple of quarters. AMD still playing a little bit of catch up in that respect. So AMD will have to grow into its current multiple. So that's why I think the share price in terms of appreciation is fairly restricted, considering also they gave fairly weak guidance for the first quarter. They said that sales once again would be roughly flat or ever so slightly down. So that's pretty much the entire story of AMD as a whole. We don't need to go through the rest of these slides. I've pretty much summed up everything that you guys need to know about the company. You just need to know that their data center segment is the one that they're most proud of and is the one that is growing the fastest. You can see that down here, up 38% year over year. So you love to see that. The operating margins of your data center segment are also increasing as once again, they scale this business to their desired level in terms of being able to service their clients. And then the operating margins should be able to go up. The capital expenditure should be going down, right? So their fixed costs will remain relatively the same, but the revenue will go up, which is going to be contributing to positive operating leverage. So that's pretty much everything that I had for you guys in terms of earnings. They were big ones. I know it was a lot, guys. So I appreciate you and I hope you enjoyed those recaps. I wish I could do them longer, but we have to do them inclusively of the rest of the video. So now let's cover our technical indexes, and then we're going to cover our major tech names. So SPY, flat on the day, still looking for the daily higher low. So nothing at all has changed. If the market gets dragged down potentially by negative QQQ tomorrow, well, tons of space for the bulls, just looking for a daily higher low. Anything above 470 at this point, just looking for a daily higher low for potential further trend continuation. And now even on the weekly, guys, tons and tons of space on the weekly. Keep an eye if for whatever which reason we do start daily consolidation with Jerome Powell and the rest of tech pulling back. Well, you have a very juicy opportunity, guys. This is going to be your previous all-time high. That is going to be the juicy area of support. 479 down to about 466 is the level, but everything's still looking good on SPY. Need to continue to see healthy rotation coming from financials and XLV if QQQ takes a little bit of a breather. Now, QQQ potentially tomorrow going to open up into a daily downtrend. So after a very nice daily uptrend right here, we got a low, potentially higher high. Nope, they missed it. If we get the lower low, it would be a daily downtrend. So this is pretty much your failed attempt at a new high right here. So if the daily downtrend does come up, at that point, guys, just weekly consolidation has started on QQQ, and QQQ can afford to consolidate, guys, right? Just looking for a weekly higher low. Anything at this point above 395, just looking for a weekly higher low. Tons of support down here. 12 EMA is starting. This green box is your previous all-time high. Resistance should now be support 405 all the way down to about 385. I know it's a wide range, but the bulls are going to be able to take some very, very decent long-term positions from there. The market is just ever so slightly overbought now in the last couple of days in terms of technology after most of your big tech has had such a good start to the year here, guys. Look at your year-to-date performance on a lot of big tech, right? NVIDIA, Microsoft up 8.6%, Apple down, but Amazon up decently. Google and Meta also up very decently. Netflix as well. Been a great start to the year, so wouldn't be surprised if we're due for some consolidation here. XLF financials leading the way, guys, leading the way with this breakout. So breakout is currently still underway. 12 EMA on the 4-hour is going to be your timeline, right? So no loss of the 12 EMA, no loss of the hourly uptrend at all. So your bulls are still in full control as soon as this move tops out, which we're getting a little bit overbought on the RSI. It could be topping out soon. If we do top out soon, guys, looking for the daily higher low, anything above 37, just going to be a daily higher low attempt for further trend continuation. And we're now pulling up on our area of resistance, guys, right? $40 is going to be your level of resistance. We're almost there, so we'll see if we can tap that, and then potentially we may be due for a little bit of consolidation. But I'd like to see financials and healthcare continue to outperform while QQQ takes a little bit of a breather. Financials earnings, guys, were really good over the past couple of weeks. And now we have most of your credit card issuers were out as well. Visa, American Express with very good earnings. Tomorrow we get MasterCard, so that'll be the cap off for financials. So financials really don't have any negative catalysts leading into the near-term future. Most of the potential negative ones in terms of earnings are now behind us. So now it's pretty much smooth sailing for financials. A lot of them reported very healthy earnings, healthy balance sheets, and decent guidance for the consumer. Now moving on to healthcare. Healthcare recovering very nicely, now engulfing your previous daily leg down. So daily downtrend was started by the bears. Now the bulls put in a 100% engulfing move. It gives them the chance to either V-shape this all the way up to new highs or put in the two-step for the daily trend reversal. But all in all, short-term bulls are recapturing control one day at a time. You love to see it. Weekly higher low at this point, guys, is most likely set. If we get a break above our previous high, 141.59, your weekly higher low is set, and then we're going to be on for leg number 2 of your weekly uptrend. Bulls in full control of XLV Healthcare at this point. In terms of areas of resistance, guys, it's going to be this red line right up here, right? So about 142 is going to be your previous all-time highs. It's acted as resistance 3 times in the past. So we'll see if we can get through this with the momentum that we have right now, guys. Wouldn't be surprising if we do smash this to the upside. Also, most of your major healthcare earnings have been pretty much out of the way as of now, and healthcare as a whole, on terms of year-to-date performance, has been one of your sectors that has been outperforming. So very good. We have a big one on Friday. Going to take a look at those, AbbVie, but all in all, most of your healthcare earnings have been fairly decent. Now moving on to the Russell. Russell not having a good day at all, 0.85% to the downside, mostly probably a carry trade from your loss leading in technology right here. But all in all, guys, Russell still looking for the daily trend breakout continuation at this point. Need to get above 200, guys. 200 has really been a big, a big pain for IWM over the past year and a half, 2 years almost at this point, right? So really need to get a solid close above your 200 psychological level. And that will really put a larger trend at play here in terms of your monthly breakout, right? So in terms of the daily bulls are still in control. Now at this point, guys, since we got a break above higher, anything above 194.13, just looking for a daily higher low for further trend continuation. If we roll over with Jerome Powell's interest rates comments tomorrow, well, unfortunately, guys, we're just going to end up in a weekly tightening range at that point. We'll be looking to protect our lows of about 187.65. It will go from a weekly higher low to furtherance of the uptrend attempt to just a tightening range, which is a very good case scenario, guys. If we can get a tightening range towards the top end of this entire move, that's a very, very healthy sign that your long-term bulls are still accumulating positions and ready to go for more as soon as we get some rate decreases later in the year. I think that's the only thing holding the Russell back, since a lot of the companies in here are unprofitable. So tomorrow going to be a very big day for the Russell. Either we're going to continue our daily uptrend, which means your weekly bounce simply continues at that point, or we're going to get further daily consolidation, loss of the daily uptrend, and into further weekly consolidation, which in my opinion is just going to be for a tightening of the range. So keep that in mind for IWM. The closer we get to 187, the closer I am to adding some positions to the Russell. Now let's move into big tech right away. So big tech, guys, Apple, very negative day on Apple, guys. A couple negative headlines. Number one was the Apple Vision Pro reviews are in. So here's one of the headlines. The early Apple Vision Pro reviews are in. They aren't helping the stock. So this article basically iterates the fact that it's a very expensive product in a very niche category, and it's going to be a significant amount of time before it becomes a considerable revenue boost segment for Apple. So they got hit with a negative piece coming out of that. And then they also got hit, guys, with a iPhone piece, right? So Apple stock sags as analysts forecast big drop in iPhone sales in 2024. Now, Apple came out last quarter and said this themselves. However, now analysts are analyzing the supply chain and coming to the conclusion that they may just be very underwhelming in terms of sales this year. So one of your analysts coming out of Taiwan said that Apple's supply chain now shows the company expecting iPhone shipments of about 200 million units in this calendar year, which he notes would be down about 15% from 2023. Apple may have the most significant decline among the major global phone brands in 2024. That is a very big headline, guys. Apple's weekly shipments in China have declined 30-40% year over year in recent weeks, and this downward trend is expected to continue. China, a very big market for Apple currently. The main reason for the decline is the return of Huawei and the fact that foldable phones have gradually become the first choice for high-end users in the Chinese market. So is Apple potentially losing a little bit of market share in China? Well, we're going to hear it best from them when they come out with their earnings on Thursday, but definitely negative news headlines affecting the stock today, almost down 2% on the day. So Apple, after having set the daily uptrend where we're looking for a daily higher low, looking for this range as support, right? 190 all the way down to about 187, but now Apple's momentum really taking us through there, right? Hourly downtrend is still in full control at this point by the bears. So as long as they control that hourly downtrend, daily downswing just continues. And now at this point, guys, the bears have taken back a decent amount of the move. We're talking almost, above 50% at this point, right? So now it really sets up the bears with an opportunity to potentially set the daily higher high, the daily lower high, and lower low. But with earnings, this could really go either way on Thursday. We won't have time to complete a pattern before earnings at this point, right? So one of two things is going to happen. Earnings is either going to give us our daily uptrend if Apple can report better than expected and really come back from a lot of the negative headlines that's been plaguing it for the past month. They're either going to set the daily uptrend, which is just going to be for potential weekly trend continuation, or the worst case scenario, we may start re-challenging these lows. At this point, Apple, guys, not so far off those lows, about 4.1%. Apple can move that amount in terms of their earnings. You keep an eye on earnings, right? A couple of earnings cycles ago, that's exactly how much they moved after their first negative news came out in a while, 4.8% to the downside. So Apple can move there. We're going to be looking to protect these lows, guys. 180.25. If we do come down, guys, in the lower 175 to lower 170s, mid 175 area, I will be looking to potentially make a play on some Apple shares. But as of now, everything relies on earnings and maintaining this double bottom structure that we put in right here. If we really come down here and flush this, well, unfortunately, it will be setting up for a potential daily downtrend for the bears and maybe even send us into weekly downtrend territory, which would just be monthly consolidation at the top. Apple may need another one of these where they just consolidate a couple of months, right? Really build up some more positive news headlines for the company and get through this transition year. But Apple definitely not positioned well for 2024 as a whole. The company is still fine. It's just they're not growing as fast as they should be currently, guys. So maybe just a transition year for Apple. Now moving on to AMD. AMD, we saw them in terms of the earnings preview here, but they're still down 6% in the after hours. So that puts them about 160, 170. This is exactly the area that we were targeting for support. It's the previous all-time high, and we were saying first line of defense, 164 down to about 158. Now we're still battling in this area here. What are we looking for on AMD? AMD currently, right? Almost daily downtrend territory, right? So we lost the previous lows, was 164.30. Daily uptrend was very healthy. Now we flushed the lows. So it opens the doors for the bears to set a lower high into lower low. If we do get the daily downtrend confirmed at that point, well, just going to be healthy weekly consolidation. AMD has tons of room to give. Very healthy weekly uptrend at this point. Anything above 133.55, just looking for a weekly higher low for further trend continuation. Now, for this pullback to still be healthy, guys, I need to see the bulls maintain the following level right here. They cannot really afford to come lower than about 154, 153. If you lose that, if you come back that much to the 618 level, it just opens up the doors for the bears to be able to set the lower high into potentially weekly downtrend continuation here, especially since they guided that they were going to have a very good Q1. It's very possible that after such phenomenal growth since October, we're talking about almost 100%, very possible that AMD just starts a bit of monthly consolidation. So we won't get ahead of ourselves. The bulls are still in control here, but if we start losing the daily uptrend into weekly consolidation, then coming lower than 154, it opens up the door for potentially a little bit of weekly consolidation through Q1, which would just be monthly consolidation, just looking for a monthly higher low. But everything is currently very healthy. I'm just setting the expectation for, the couple weeks and for the quarter down the line. Now moving on to Amazon, give me a quick second. So moving on to Amazon, guys, Amazon also pulling back after the news pretty much from Google in terms of their advertising segment. Meta also came down from that actually, but Amazon pulling back ever so slightly from the high of the day. They hit a high of about 161.81, now really pulling back down to about 156.57 right now. So Amazon still in a healthy daily uptrend. Obviously they have earnings on Thursday, so price action should be fairly muted. We're currently looking for the daily higher low right here. Currently battling with our 12 EMA at this yellow line. After hours move is right here, guys, at the 12 EMA. So we'll see if they get continuation to the downside on that, but bulls still with a lot of space, guys. Anything above 149.68, just looking for a daily higher low for further trend continuation. Not going to get much price action before earnings. And as I was saying in yesterday's video, guys, there's only two possible courses of action. Either we're just going to maintain this daily uptrend, send us into a resistance zone of 165 to 170, or we may just be due for a bit of daily consolidation. If we really come down after earnings and set the daily downtrend potentially thereafter, well, it will just be weekly consolidation here, guys. Anything above 144.85, just healthy weekly consolidation, and monthly uptrend is more than set at this point. So Amazon bulls working with so much space, no red flags currently. The catalyst here for earnings is most likely going to be EPS and margin guidance for the full year, and the growth of their AWS services. But a lot of emphasis is going to be put on Amazon's bottom line, because they have been doing a great job here after running a few very slim quarters of profit margin. In the last 2 quarters, they've really been upping their net income and their bottom line and their free cash flow. So we need to see a continuation of that trend. It's going to be front and center for Amazon. Now moving on to Google. So Google obviously dropping to about under 145. The expected move was about 146.43. Now Google passed the expected move at this point, but Google had a ton of space to give here, guys, right? So daily uptrend was very healthy at this point. Now we've pulled back to about 144.81. So the higher low, looking for anything above 140.5 to be a daily higher low for further trend continuation. They're still not through this little area of previous resistance, which is now acting as support down to 144. But let's say we continue the downside, guys. Well, unfortunately, at that point, so far, the bears have taken back, with this earnings move, they've taken back over 61.8% of the move. So going to be very tough for bulls to V-shape this. The most likely scenario at this point is for a lower high at this point from any bounce, right? Okay, but from the lower high, what is going to be the most likely course of action here? There's one of two possibilities: either a tightening range, or worst case scenario, we end up with a daily downtrend. In the event of a daily downtrend, guys, just going to be weekly consolidation, anything above 137. Very healthy weekly consolidation of this uptrend right now. You have your 12 EMA down here on the weekly at about 143, and then this massive support area, guys, 141 down to 138. If we get down there, it's such a juicy buying opportunity for long-term Google bulls. Monthly uptrend still very, very healthy as well. So we'll keep an eye on Google, but as a whole, bulls still in control, guys, still in full control of your higher time frames, just really pulling back significantly now on the daily. So we're going to be looking, the best case scenario for the bulls is setting up the lower high and then a tightening range for them to really protect that. That could be a likely scenario because we do control the monthly in a significant fashion and the weekly as well. And Google's valuation is not really that high currently either. Number 5, moving on to Meta. So Meta down in the after hours here. They were down on the day, but down in the after hours after the Google ad revenue headline slump. So we'll see how Meta reports advertising revenue here on Thursday, but still stock is currently overbought. A lot of these stocks, guys, were overbought, right? Google leading into it. Amazon was slightly overbought. AMD was heavily overbought. Apple was the only one, but they've been dropping for a while, right? But Meta, take a look at this, guys. Maybe a case of the same. If Meta comes in just in line, nothing spectacular, may have a little bit of a drop after this significant run up from the beginning of the month of January, guys. We're talking pretty much, 18% to the upside. So Meta can definitely afford some consolidation. Daily uptrend currently looking for a daily higher low. Looks like after this after hours drop, we will be consolidating tomorrow. Looking for a daily higher low, anything above 359.70 for the daily higher low for further trend continuation. Now, on earnings, one of two things can happen, obviously. Take a look, and be looking at this higher low. If we come back too much into it, guys, could set up for the same thing like Google. A lower high is going to be most likely for sure, but then can they set up the tightening range and protect this uptrend, or will they set the daily downtrend into weekly consolidation? Either or is fine. If we do get daily downtrend here after earnings into weekly consolidation, Meta with tons of space, anything above 340, just for a weekly higher low for further trend continuation. So all these stocks have so much room to pull back, guys. No red flags whatsoever in the markets currently. And the earnings weren't necessarily bad, guys. They came in, year over year basis. Everything was up. It's just they weren't a significant outperformance, just like Netflix was. So a little bit of profit taking on the shares after so many of these are at all-time highs and daily overbought conditions. Now moving on to Microsoft. So Microsoft pulling back slightly, ever so slightly in the after hours here, 0.57% to the downside. We'll see how they open tomorrow, but Microsoft protecting their daily uptrend better than most after earnings. So daily uptrend confirmed, just looking for a daily higher low, anything above 385 at this point, looking for the daily higher low for further trend continuation. We'll see if they can consolidate a little bit over the next few days, bring this daily RSI down, really just set the daily higher low, maybe your 12 EMA right here, 398, just under 400, set the daily higher low and continue moving. But Microsoft's earnings were fantastic. We have so much space on the weekly as well here, guys. Anything pretty much above 366, just looking for a weekly higher low. So even if Microsoft starts a daily downtrend as well, so much space on the weekly. Now moving on to Netflix. Netflix consolidating a little bit on the day here today, 2.25%, but Netflix with so much room here, guys. Such a healthy move after earnings, just looking for a daily higher low, anything above 476 at this point, looking for the daily higher low. You don't really want to see Netflix come much below on this daily bounce here. 528 is really the line in the sand level for me. That would be a 50% retracement to set the daily higher low to give the bulls the best shot. If they pull back too much, let's say they pull back to 513, could set up for the tightening range on Netflix, or at worst case scenario, the daily downtrend into potential weekly consolidation after their earnings. So we'll take this one day at a time on Netflix, but so far, so good. Still not closing the weekly above our previous area, guys. 2020, 2021, keep in mind, huge area of consolidation for about a year and a half at that point, and still unable to close above the top end of that range, which is about your 575 area. So that top end really acting as resistance. I wouldn't be surprised now if Netflix just maybe gets caught in this little range a little bit, the same as it did back in the day. Just still significant gains from the beginning of the year on Netflix as well. Moving on to NVIDIA. NVIDIA reacting a little bit to AMD's earnings in the after hour, but not too much, guys. NVIDIA was up on the day, down in the after hours. We'll see how they open, but NVIDIA looking to set the daily higher low currently, guys. This is all one move, no pullback significantly, still no real loss of the hourly trend at this point. We'll see, can it happen into tomorrow? If that is the case, daily consolidation is underway. Tons of space, anything above 475, daily higher low for further trend continuation here, guys. Looking gorgeous on the weekly, looking gorgeous as well. So much space after this weekly breakout. Weekly uptrend confirmed. Any pullback, anything above that same 476, just for a weekly higher low. So even if semiconductors as a whole, guys, take a little bit of a break, all these semiconductors have ran significantly except for Intel since the beginning of the year. So even if semiconductors as a whole takes a few weeks off, they can afford it, right? Daily downtrend, look at all this space on the weekly chart. So much space. So looking decent on NVIDIA, no red flags as of yet, but overbought, may just be due for a pullback with the rest of big tech. Now moving on to our last couple of ones. So Tesla not performing that bad here today, down significantly in the after hours though, guys. 3.3% in the after hours. Was there a headline or something like that? I don't know. We'll take a look at it tomorrow, but may just be some consolidation from your big tech earnings. But as a whole, guys, Tesla, the bounce, just not high enough. So we'll see how they end in terms of tomorrow at the close. But we were looking for the hourly uptrend. We had the hourly uptrend leading into yesterday, but lost it already on the course of the day. We'll see if they open like this tomorrow. Hourly downtrend, it means your daily bounce is already finished, and we're looking for further downside consolidation. So the size of the bounce was key. How much of this bounce, right? How much of this move down did Tesla bounce? Only 38.2%. Not good enough, guys. At that point, the expected move does become daily lower low consolidation or continuation of this massive daily downtrend at this point, of this massive weekly downswing. Going to be targeting the lower end of your downtrending channel at this point, 175, and also previous area of confluence. This is big area of support. We're talking about 180 all the way down to about 168 level is going to be that area, and we should be pulling down into that if these technicals are anything to go by. So not looking the best at Tesla. I'm happy I was able to play a few bounce trades from the low of earnings on Tesla, but as a whole, guys, the bulls are just not getting it done. Best case scenario you can get is a shallow move down and then an engulfing move at this point, because it doesn't look like they're going to engulf this move as a whole. Nasty move down after earnings. So may just need a shallow leg down to this area and then an engulfing move, but it's going to take some time for Tesla, guys. Tesla is so interest rate sensitive. Tomorrow, if Jerome Powell says something bad about interest rates as well, Tesla should be affected to the downside. Now, Palantir pulling back, 2% from their yesterday's gains and another 1% in their after hours. So Palantir was potentially losing the daily uptrend. Daily uptrend was set. Bears coming back a lot, and then yesterday came up with a nice candle we were trying to recapture as best as possible. But I said, guys, with such a big recapture of this upswing by the bears, may just be looking for a tightening range. Best case scenario, worst case scenario, lower high into lower low. So at this point, guys, we're going to be looking for the bulls to protect 1631 in hopes of putting in a tightening range here leading into earnings, which is pretty much going to be next Monday. So probably not a lot of price action going to happen before Monday. I'm really not expecting a break, guys, of this lower low right here, 1570 or even 1830 much before earnings. We may just end up getting really tight on the price and then break either which way for earnings. So we'll cover a bit more of that later on in the week, but just keep in mind Palantir is currently still in a weekly downtrend, weekly big support right now, $15.50 down to $14. Should be a very big area of support. Still extended monthly consolidation as well. So earnings is going to be crucial for Palantir here in terms of their net margins, in terms of their EPS growth, and in terms of have they been able to onboard new large clients over the past quarter that they potentially did not disclose over the course of the quarter. Going to be looking for that for Palantir, but as a whole, just ending up in a tightening range. And now lastly, PayPal. So PayPal down 0.13% on the day, but they actually got they were low this morning, and then they actually got some really good news into the end of the day. That was the fact that PayPal was cutting about 7% of their workforce. It is right here. PayPal's latest layoffs could prove fodder for the stock's bulls and bears alike. So they did cut about 9% of their workforce. Very, very good, guys. So they cut an addition. They were cutting about 7% last year, and now they're cutting an additional 9%, I believe, is going to be the headline. So very good. Yeah, the company cut 7% last winter under leadership of the former CEO, and now they're going to reduce it by a further 9% of layoffs. So the new CEO is doing a lot of things in such a short amount of time he's been with the company. He's really focusing on cost control, and that is the name of the game for Palantir. For PayPal, we need to see an increase in EPS, need to see an increase in margins, and we need to see an increase in free cash flow. PayPal's free cash flow and EPS have been relatively flat for a very, very, very long time, so we need to see an increase in that. But all in all, technicals not looking bad. They do have earnings coming up here next Wednesday, so going to be huge for the company. PayPal, just a tightening range currently. I was saying after a nice daily uptrend, the bears took back a lot of the move here, guys. That's why I always use the fibs to gauge the pullbacks. They took back 80% of the move, and I was saying, guys, after such a big pullback, it's very tough to get a V shape, right? You usually end up with a tightening range, and PayPal's done this a bunch of times, right? Take a look at this one right here. We'll just do the same thing right here. So move up. Right? So move up, top to bottom, bears taking back almost 80%, just about 75-80% of this move right there. Look what happened, just tightening range, right? So maybe in for the same, probably going to tighten up here before earnings, guys. I'd be very surprised to see a break of 68.16 or even 56.38 to the downside here much before earnings. I do hope that we continue to tighten up here and not lose these previous lows. 58.81 is going to be the mark. If we do come down to there, right? This area is going to be acting as big support, 60 down to about 57, big area of support. But we keep challenging, guys, this down trending channel line on PayPal. So eventually you're going to need to see the bulls break and close above that. Earnings could be a huge catalyst to do just that. Tomorrow, going to be very good for a very big day for PayPal, considering the comments by Jerome Powell, obviously a highly sensitive stock to interest rates. So that was everything that I had for you guys today. Hope you guys enjoyed it. I apologize once again for spending a long time on the earnings, but I feel that it's big tech, so we do need to do our due diligence on these carefully and do more in-depth reviews. So rather than just reading the articles for you, I always go through all of the earnings calls and the earnings presentations as well. So hopefully I was able to convey some noteworthy information to you guys from that. I always look at them before, but before, a couple quarters ago, I only used to read you the headlines for the articles. So I was able to cover each earnings in about 2-3 minutes. But now since we're doing a bit more deep dives, which I think is very relevant for the channel, that's why it takes about 6-7 minutes per earnings call. So I hope you guys appreciate me doing the earnings call. Leave me a comment down below if you'd prefer if I do these in separate videos. I can always do them in separate videos, but I like including them because it does help with our price action review as well. So hope you guys enjoy the video. Consider dropping a like if you did, and consider subscribing to the channel if you're new, guys. We do these videos Monday through Friday, daily market recaps and showing my portfolio. And on the weekends, we do educational content in terms of strategy or trade picks for the upcoming weeks. And as usual, guys, if you have any questions whatsoever, macro, TA, options, earnings plays, whatever you want, leave it down below in the comments and I'll answer you as soon as possible, usually within the first 24 hours. So take care, guys. See you tomorrow after the close. Huge day tomorrow. Jerome Powell and more earnings. Qualcomm, MasterCard are going to be the big ones, in my opinion, for tomorrow. So take care. I'll see you tomorrow after the close. Peace.